fire, now it's closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Fire, take my hand, I'll take you higher than you've ever been. You've ever been.
Thank you for coming on into live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go. So Bitcoin getting the rejected off the point of control. We did see a little bit of an upside off that cloud bounce earlier today in the Asian session, but as Asia likes to do, they like to fade it into London, and then New York takes it away, and in this case to the downside. So overall, we were looking at that overall target down below at 28.1 for that point of control bounce, potential off the 618 golden pocket region down here, and the liquidity stands down below to also insinuate that move. So what is high block capital? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see where those crispy characters get burnt or are waiting to get burnt. So let's do that now in the 1 minute time frame. As Bitcoin drops, let's see how the liquidity shifts and undulates. Let's go ahead and take a look at the 1 minute time frame. Okay, so as we got this rise up and took out those pools earlier today, we were talking about coming up to these $36 million pools of the 100xers, and they came back to a T. They came back to those levels and reversed off of them. Let's just make it more wider so it's easier to see. So they came back to this 36 million pool, 16 million, 32 million, 30 million, 48 million. This entire pool they came back and grabbed and immediately dropped from there. There were some other pools pinged in on shorts, and they came back for those 100xers and then decided to make the real move to the downside.
Fatality.
And that's what happens to the 100xers that open their shorts late and leave them open too long. So as it stands right now, you're getting some shorts, more shorts opening to longs here, some 80 to the tune of 80 million, 59 million, 12 million, and 77 million in 100xers, which they're attempting to V-shaped up and grab to liquidate and fuel the move potentially as a B wave to the C continuation to the downside. Let's go ahead and see what is lurking below too. You're getting some 38, 48, 45, 36, 40, 34. You're getting some longs pinged in as well. It's not without the long interest, but there is slightly more short interest as of this moment, so they're starting to possibly come up to this 28,955, 29k bearish retest idea, stop out the longs and potentially come lower if that is their move for the false move Monday. This is why we were talking about it possibly getting the push up, but overall we were going over the weekend as this downward play insinuates. So we wanted to cover both sides of the equation, but I'm waiting for that swing long juiciness personally. So let's go into that 7-day time frame. So the 7-day time frame, they came back down into some of the liquidity here at 28.7, 3 billion off the table, 3 billion, 3.8 billion to be exact, and the 2.9 billion character as well at 28,750. Looks like they're coming up to that $500 million up at 29k even to possibly fuel the drop lower on the 7-day time frame. 7-day time frame was getting yellow hot to the downside there. The next region is up above at that 30k region here at 4.3 billion. Let's go ahead and expand our vision to the 1 month. Shout out to everyone here. Booyah. Oh, the laptop died on you. Oh no. Hopefully it's all right. Hopefully it was just the battery and not the hard drive. On the monthly time frame. So the monthly time frame started to make that insinuation to drop further to the downside. We have that pool at 13 billion and two 13 billion pools at 28.1 and 28.2. So that's $26 billion down there. You got 8.9 at 28.3, 9.4 at 28.4. So you got about $40 billion down in that region. If you're going to bounce here, that is looking to be just a temporary bounce for a continuation to the downside. I would like to see it come down to that region. That would coincide quite nicely with this point of control here on the Coinbase chart on the 28,227 region of the 618 bounce. I would like to see it. Let's make it happen. Finally some action out of this range. All right, let's go to the Binance chart and start to talk about, we already did the levels for the higher time frames, so we already know where that is from earlier today. We're not going to do that again. So a lot of the 1 minute time frame pools are starting to get lost to father time here, so you're going to lose these characters up above the 247 million at 30,127. Lest we forget, he will move to the 7-day time frame. Same with this 247 million at 29,548. So see those guys on the higher time frame, and we will go into the bearish trend-based fib levels here on the impulse retrace idea. The 236 entry model drop to the 1, retrace back up to the 65706, meander around here, come up a little bit above that, can't even muster the strength to the 236, comes back down into this level, and bearishly retesting the 786 to go further, possibly to the 1382 and the 1618 on the Fibonacci bearish trend-based fib levels from back here. Still holding intact, as we cannot muster the strength to come up to these bullish regions just yet. So the next on the chopping block is 28459 and 28121. I'm here for the Hail Mary. Let's see it happen. And let's turn on our heads-up display and oscillators to see if there's anything we can glean that's less ambiguous than it was before. Link in the description for more. Scroll down features, toggle everything at your leisure, or look at the ones that come into prominence as we talk about it. Okay, so we're talking about the potential fake out curvature of the angle here, meandering on the 6-hour time frame, talking about this curvature, this to the potentially shifting back to purple. Looks like that's happening on the 6-hour time frame. We're getting this KD line cross at the 50 level rejection here. Red vector candle on the 6-hour, which closes in 1 hour and 7 minutes. Look for that to lock in and cause some algorithmic ripples in time. If we look at the daily time frame, we'll make our descent through the time frames real quick. We did not get to see how the daily candle closed, and the daily candle closed with a reset to those levels down below, continuing the suppression of downwards momentum with that indecision doji. The cloud is still pushing down, and your baselines still randomly holding, but after that cross up event, not having a chance to even cross down with the momentum. So at a weird position with that fake out breakout. And looking at the 22-hour, also with that purple cloud shifting the volume to the downside as you got that rejection, and the super trend is holding to the bearish trend to the downside. Let's see how this level takes us. Do we recover the wick and go beyond this point? Let's find out. 12-hour time frame, also 7 hours from now with the daily candle close. We'll close with the daily. We'll see how the 12-hour treats us. Looks like it's going to the downside. RSI and money flow have come together, so it could go either way at this point. More to the downside would be to my liking. I need to see those discount prices. Let's make it happen. Liquidate them longs. Let's go. Go into the 6-hour we just talked about with the vector candle closing in 1 hour and 6 minutes. So can we get some intention behind this candle in a red form? As it stands right now, with all of the pools that opened, that 80 million pool, there's nothing with real interest just yet. Comparatively speaking, you've seen those 200 million and 180 million. There's nothing breaking 100 million just yet, so they could take out that 80 million 100x and just say, screw it, and then drop lower. They're trying to test the inducement of both sides right now and see which direction, whether they should just fatigue it out or induce some more longs in. If you go into the 4-hour time frame, the 4-hour closed just an hour ago, just above the super trend. Not that it matters with that flat super trend like that. And you could be seeing this hard reset of the 4-hour time frame. The 4-hour time frame is coming down on you in a manner here. The cloud also, you never got above that on the 4-hour time frame, so you never even managed to get above the cloud or the adaptive. So this is a bearish overtone that is being cast onto the price action, and you are possibly taking it to the downside here. KD line still expressing downwards momentum on the 4-hour. Hourly time frame, looking to have an hourly scalp with the 3 time frames oversold here on the stochastic array. This 3 sometimes plays out if you are already in the uptrend manner. But if you're down here and you're trying to play out, it could be, if you're starting your path to the downside, these 4s and these 3s could be taking you a leg further down. They do provide you with some sort of bounce nature, so even these alerts coming to your phone can give you that bounce potential. That's why we were talking about on the Asian session this bounce idea above the cloud here, because that can give you a good percentile or eat into your profits of a short by a percentile, so you could reposition on the fatigue there. So as it stands right now, you're getting 3 red vector candles which got bought back up on the first 2, and the third one was a charm and came down below, and you're getting this green vector in return on the hourly time frame. If you go to the 15 minute is getting overbought here as you approach the cloud on the 15 minute. 15 minute cloud is still thick purple, so coming up to this bearish trend base fib level at the 29K region to liquidate these 88 million. Did they already get it? Looks like they grabbed him. They grabbed the 80 million guy. So they grabbed the 80 million guy at 28,955. He is gone.
Fatality.
Yeah, so they got that 100x short there. So they could be got what they came for and head lower, perhaps. That was with that spike up here to the 28,977 region. You are attempting to give this cross up potential of the 15 minute. You got to give it its credence. If it can close in 2 minutes with that, it will cause this to cross up, and you could be seeing some small little 15-minute play. The 15-minute is getting overbought here. However, the Williams cross up event and the MACD coming down into this domain could be the play here. Once again, it's False Move Monday. We're looking for the Tuesday daily candle close level to insinuate the move for the week on Tuesday, Wednesday. There is some news inbound for the forexfactory.com. You can go see what the weekly forecast is. You have some, it's easier to just share what I posted. Let's go back to that. So you have the CPI data and the core PPI data on Thursday and Friday, and you have a bond thing on Wednesday. Something to look out for the week in news. So are we possibly repricing lower to get some sort of bullish news to start us off as that price is in? I don't know. So the key levels to watch here for a interesting bounce potential is if you have the stochastic array and the dynamic alert system sent to your phone, then these 5s and the 6s generally tend to play out with, if you sit through them, they play out with at least a percentile move in a direction of your choosing. So if you wait for that nice little smooth entry, or we just would love to see that confluence line up, the stars align, this entire region. Even getting this bounce off the 29K region was a star aligning in some sense. So getting a star to align on the 1618 with the point of control would be a nice little idea to unfold. If we look here on the Fibonacci range here, if you take this to the upside here, this Fibonacci 618 also coincides with the 1618 of the bearish one, insinuating you will come to that 618 bounce. And then also if you take this fixed range volume profile and do this for the entire range, it takes you into that golden pocket. So that point of control, which is also an SR flip of this resistance here that we broke through, the test of previous resistance into support, it just makes sense to me. That would be a nice little level, and that's what we had here for this arrow to occur, coming down into that level. Could be wrong, but I'm on the sidelines, so you're not wrong if you're not in the trade. I'm just waiting for the levels to come to me. Only the penitent man will pass, so the patient man will win. So let's make sure that it is a good level before you start to long. This trash consolidation, not interesting to me. We need more clear levels and clear confluence for our entries. So this is where it comes into focus with the monthly time frame and seeing this 28.2 and 28.1, and we'll watch for a reaction for that and possibly pull the trigger if that hits in a relatively nice manner. So looking at the 1 minute time frame once again, this is a very rare time where they've essentially gone sideways with no liquidity pinged in at all, except in this one area here now. So you have this one bubble of 182 million just sitting there, but the rest, all these small bubbles, just shows how disinterested people have become because of the trash consolidation. All of the, like, people want to see more volatility, and just there's nothing to justify the moves. People are not enticed into crypto as much as they have been. So we're going to look where we bounced off of the 6 hour time frame. It's interesting, we came right down to the adaptive and wicked right off it at 28,690. This is also a daily support structure. So this support line is something on the daily time frame. We're going to remove this 618. Actually, we'll remove this whoops, no, back. All right, so we're going to go to the daily time frame and show you where that daily structure is. So if we go back here, the 28,690 is a daily support thing from back here on May 18th and 19th. It's also a wick from May 24th, 2022, and you have a bunch of other wick contact point touches. If you go back further in time, we also have something within that relative range back in 2020. So this is not an arbitrary level. I basically took this range over here from 2022 from May and saw that bounce of the daily time frame in these wicks and said that's a good support level to look at. And we also had resistance multiple times there, broke through, false resistance, broke back down, and now we're coming back to that, and we wicked right off of it. So as we lose these yellow daily support structures that turn into resistance again, coming back down. Now we're coming down to that 28,690 support structure potential. This was reclaimed, so I can take care of that fair value gap. And if we go down to the 6 hour time frame, that is exactly where we wicked off of 28,690. It was a little bit higher than that 6. It was 28.7 actually. So we didn't come down to that exactly yet. Let's go ahead and take a look at total. See how the total is coming down. Getting a rejection off the 786, coming down into that wick here. That wick has been reclaimed, so I can delete it. Now coming down into this one level would be ideal. We went over that for you as well. Coming back into that already with total 3 as the altcoins bleed out into the bearish projected zones. Bitcoin taking its jolly time to reach there, so we haven't got there yet with Bitcoin attached. If you take out already reaching there with Ethereum only. So now it's just up to Bitcoin. Let's look at the Bitcoin dominance and the USDT dominance. USDT dominance reaching up into that fair value gap range we talked about as a projection point. We got to that 618 bounce. Next level is up at 791. If we're so inclined, we could break back down. People getting kicked out into Tether. Bitcoin dominance also going higher. Initially got the nuke and chilled out for a couple days, and now we're potentially breaking up above that level. $50 level would be up here on this impulse to the downside. Recovering at least half of this vector would be in order. Let's go to the dollar. Dollar made its way up here. We talked about it chilling out to reset some stochastic value as the price was getting beneath the baselines, and we saw this cross down event ensue. This is why the baselines are your first sign of reversal on either side of the coin. And yeah, let's say what's up to everyone. Yo, Dingo, what's going on? So seeing the dollar come back down here. Could be just chilling for another leg up. Let's say this played out already. So we already came down to the 1618 of that bearish trend-based fib level. The 236 entry broke down at that level, came down to these, meandered for a little bit, and then broke down into these levels all the way down to the 1618. Hail Mary, double bottomed out. So that narrative is done, so we can remove that. But that's why we bounced there and not at a support structure. The math has it contained within this impulse retrace idea. That's as high as you could muster, so that math tells you where it wanted to go, down to there. So now we can do the inverse. So we can take this ABC to the upside and then do the same thing here. Take that impulse up to here and then retrace it down to there. We're going to remove this one, the bearish path, and it looks like we retraced back up into this consolidation range. So this is your consolidation, decide what to do, where they ping the liquidity at the 7806 trapdoor zone for a potential rise up. And then you got the other levels up here at 103, which also coincide with the range high here. So coming up to that region as a continuation idea for this bullish trend-based fib to continue on the dollar. Now, if that were to occur, then Bitcoin would be continuing, as would the total for crypto, down the tubes into these regions. So this would be a golden opportunity for the golden pocket to come into this region. We're going to be watching for some sort of reaction there. That would be nice to see. If it breaks down to that level. The 28,120 to, yeah, and then you got the liquidity to match on the monthly time frame. Let's go to I think on the 6 month it was like 40 billion there. Let's go ahead and check it out. So you got 48 billion at 28.2, 41 billion 27.9, so you might even wick down into the 27.9 region. So you come down to that 0.65, 0.66 region, just this entire kind of block here. Within that Hail Mary play of the bearish trend-based fib. And it's just like, until you can break that 236, these are the only levels you're looking to obtain. And this is just resistance while you make your way down into these regions. So we'll be waiting. It could leave with the train could leave the station without us. We'll see. There's nobody entering for the shorts. No one else entering just yet. wanting to come back above that 29K region. Not really pinging any longs in as it does this. So they're reaching for the stars in terms of the shorts. They want to knock out these 100xers if they were going to continue lower this 77. They're taking what they can get. They can't get these huge pools to enter just yet, so they are just taking the low-hanging fruit of the 100xers right now for a ride, saying you got to lower your leverage, fools, or pay yourselves immediately. You're not getting that easy of a drop from us. So the 15-minute did cross up here, and this is what the baselines have you at hello on if you are so inclined to scalp. They are ultimately a scalper's dream, so you could be entering into these things and trying to test your might as they cross up here on these, and you would be seeing this also on lower time frames. If you were so inclined, you could see the cross-up event on the 5-minute, and this is why we turn down the opacity on our candles, so that we can see the price holding above the baselines and giving us that insinuation of upside on the momentum. So I was breaking it down for a friend the other day. There's basically 3 aspects to trading. You have momentum, and you have the Fibonacci, and then you have the liquidity. And those 3 things work together in tandem in this weird amalgamation of price action, and they create these inducement traps which trap the liquidity and then go down to these regions mathematically that they've already outlined in their inducement process of trapping the liquidity. And then if you study where the liquidity is, it always lines up with the math, and it's just this triple fold game of traps that they play with the 3 things: the momentum, the liquidity, and the math. So if you study those 3, you can get yourself into understanding where the momentum shifts off of the liquidity. And it's this interesting little game that we all play by entering into the trader's world. So the 15-minute is looking to try to bounce up through this cloud, but based off the thickness of this cloud, the momentum suggests that it wicks off and comes back down, as does the liquidity here when it starts to take out some of these 100x pools. Does it have its fill off the pools up at 29.051, 29.51 would satisfy the 77 million urge to eat that up there, and the 29.77 will put you wick up off of the weighted moving average, and you'd be back whence you came. You're already getting the cross up though, and unless you see one of these type of dealios where it crosses up to cross down, you could be seeing more of upside, just playing the scalp of the 15-minute and seeing where it takes you. And this is what we did earlier today when we were looking at the hourly, when it held this cloud. Earlier today when we streamed, we were saying you could probably get a little bit of upside, and you saw like 0.5%, not much. But then getting the rejection, and we talked about the cross down, and when we failed this cloud, we were saying it looks like it's going to get more downside. So just as it held the cloud here, as it starts to reject the cloud here, so this was a point of scalping intention to the upside, and here is a point of scalping intention to the downside. You had the cross down event, and you had this failing off of the cloud here. So you could have either taken the rejection off the weighted moving average and this symbol of 2 time frames overbought, and you're reaching the top of the range, shoulder, head, and shoulder, and take it to the downside for what it was worth. I was on the NASDAQ at the time. I've been finding more interesting, faster trades off of the NASDAQ that actually have intention behind them and liquidity. So I haven't been taking these little scalps as much as I had in the past, just not really having the conviction behind them as they used to. Once again, one 5-minute candle of NASDAQ contains more volume than Bitcoin in a day, so you get a little bit more clarity with the moves and whatnot. So the 5-minute was getting rejected off of this adaptive in the weighted moving average, so that was your signal, if you will, and getting cross down rejection off the cloud on the 5 minute, and this is how you could have monitored that smooth shift of the trend cloud and drop to the downside. Now we're starting to see this V-shaped out of here to grab this liquidity of the 100xers. Not seeing the interest in longs, which suggests they could just keep going here. If the longs don't enter, they don't have any reason to go back, so they could just keep going up into these guys up at 29.051. Once again, the 6 hour time frame is what we're aiming to see what will happen with that. 43 minutes for that to close. We will not stay online to see how that closes. It'd be nice to see that red vector maintain its selling and not get bought back, because this is not an area of interest for me for a long, so I'd like to see it come lower into more confluence on external pools. Eight-hour closes in 6 hours time. You're getting that ambiguity of the possible shift back to the downside on the 8 hour time frame, attempting to hold the adaptive on the 8 hour. Let's see if you guys have anything you want me to look at while you have me. Let's see what you want to see. You can shout out some altcoin, I don't mind. Anything? I'll show you what I was taking earlier today on the NASDAQ. It was interesting. So on the NASDAQ, we're going to go into this, show you a little bit of what is possible. Alright, so we didn't take this trade, but we were watching it because it was the open, right? And so the open basically opened bullish, but it was a bull trap because you had this bearish divergence forming on our oscillator here, and then they started to dump it to the downside. You had another hidden bearish with the finger down here. It started to play out and suppress to the downside here, and basically, oh, we got to switch to the 30-second and do this. All right, so here we go. Okay, so on the 30-second, you're seeing this also suppress, and you're saying do not enter long, and so it surged up but rejected off the weighted moving average. And we actually took this idea based on the bullish divergence play. Where was that? We took it for 32 points here. Was it here or was it there? I'm pretty sure it was here. Yeah. There was some bullish divergence that was forming on this, and then we took this 32 points up and then cashed out at the resistance here. And that was basically it. We were on the sidelines watching, trying out some new settings on something, but you see the bearish divergence start to play out, and you saw the flame of the bearish divergence on this starting to play out as well on the 1 minute, and then we started to see this drop to the downside. So this is the scalping tool for the NASDAQ that I'm developing in conjunction with the Momentum Master suite. Still in testing phase. You can only test it live because of the sub 1 minute information it's gathering. But as you see here, you get some bearish divergence that played out for a little bit, and you had some hidden bullish that started to play out too. Now you're getting some bearish divergence and things telling you to be careful about going long here. And that is how the oscillators work. Looks like you might have already had that bearish divergence play out with this drop from 436 all the way down to 416. So that 40-point drop was the bearish divergence right there. So they could have repositioned back in off that liquidation event there. But this is where you start to see these lower time frame stacked divergence plays start to play out. 𝗥𝗲𝗃𝗬. We'll just see how this plays out real quick, if you don't mind. Meeting with resistance, you got that bearish divergence, the finger down on both time frames, and sure enough, getting some bull liquidity trapped there, most likely off the breakout. The breakout traders get hook, line, and sinker to the grave. And this is how the optima works in your favor for that bearish divergence, watching out for a possible reversal here for NASDAQ. You do have the cloud holding strong on the 30-second, and the 1 minute still has some strength behind it. Bounced off the cloud previously here. Boom. You didn't have bullish divergence, but that's where the cloud had you at hello. Starting to get crossed down events on the baselines here for the scalping of the NAS. So you could be seeing this drop here. Got to lock it in though, 18 seconds to lock it in on the 30-second. And this is how you move fast, the fast volatility. This one actually has like momentum behind it and directional changes, which you can play into profit, as opposed to sideways action and liquidity voids that lack gusto, let's say. Looking to get that push off the cloud here, perhaps. No. We closed out our Ninja Trader, so we're not in any trades right now. We had a good play off that 30 points, and that was enough for the day for me. Reaching up into some resistance levels here. If we break up higher, we could go up to the 42 range. That's why I was saying this bearish divergence could have already played out with this drop, because that was a significant drop from 35 all the way to 16. That's 20 points. You wait for it to see if it gets a higher high, and this still maintains low, then the bearish divergence is building in momentum to a massive reversal. Overall though, it just looks like it's getting higher highs on the price action but lower lows on the oscillator here, the averaged oscillator. So you'd be looking for this to reach the threshold of the fly away zone. When it gets to be flying away, then it has some vigor behind it. It has it on the 1 minute. Fly away. There's not really that much structure here though. This is not my cup of tea, because it's a bunch of gobbledygook. You're not really seeing like a clear ABC retrace wave. Now when you have stuff like this, when you have like a huge wave, then correction, and then down wave like this ABC, then you start to see these nice smooth moves up. This is kind of consolidation just after lunch. Anyway, enough with the NAS for now. I don't know if people are interested in seeing that necessarily. Money flow is getting above the RSI here, suggesting it will break down at this cloud though. Boom! Cross down event complete. If you look at the 1 minute also, cross down is complete. Just need to break the cloud with conviction, and then that's down to the adaptive here at 407. And you're getting some bearish divergence continuation on the 30-second from up here. It's a new little thingamadig that we're working on. I think some of the other traders in Momentum Master are having fun with it too, hopefully. All right, we're gonna go back to BTC real quick. Oh, there you go. Getting that bearish divergence play out. There you go. Boom, brrr, and it says do not enter long, be careful. And there you go. Cross down event complete. So the narratives that start to build on these, well, you know, you always have to have one foot in, anything's possible, starts to play out in some degree, and you could take these for, you know, 20 points, and 20 points is like a decent amount of money if you open up a contract or two. So something to think about. You know, the links are in the description. They're going through a 90% off sale on Apex and Bulanox for the next 10 days or so. Something to think about. Alright, so let's go into the, and that would have been like locking it in, and just doesn't matter what it does after that anyway, so it can go back up from that point. So let's go take a look at BTC. What did it grab on the liquidity end of things, and is it going to head lower? Personally, as we were saying on the 15-minute, the 15-minute cloud rejection idea is just something we've back tested to see to be true, unless it clears it with extreme conviction and then starts to shift the cloud in a manner and comes back and kisses it. That would be your entry for a long. But most likely with the thickness here, it gets rejected off of it and it becomes a continuation wave to the downside. You are getting this cross-up event, so if the baselines hold, this could be a short bear trap if more bears enter at that time. So it's all about contingencies of what happens off of that reaction. So if nobody enters, then they just keep going, and it gives them the clearance to keep going after they took out these $130 million characters. So we've already outlined the levels that we're looking at, 28.1, 28K. I think a lot of people saying the same levels because they're seeing the same math. The 6-hour cloud in 6-hour candle in 30 minutes, the cloud is starting to shift to the downside after you reject it off of it. So we could be seeing some more downside here on the 6-hour time frame. Let's go ahead and look at the oscillator one more time. Yep, and that looks like it could close bearish. So we'll see in the next 30 minutes. And that's my story. I'm sticking to it. I think we're coming down to these levels, folks. It'd be nice to see some discount prices. I think everyone's waiting for it. And on that note, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thanks for doing your part, for coming on in each and every day, and we will catch you on the flip side. We always bring you the fire, the accuracy, the precision, all that fun stuff, and we'll catch you on the flip side. Peace.